right, hello everybody, and welcome back to another Pepperstone live event here where we talk about everything to do with candlestick patterns, scalping, day trading, and obviously how we can start to implement those types of patterns into our daily analysis. Today we'll be bringing together quite a few things that I think you'll find very interesting. And of course, we're getting a heat up in volatility as well. So join us as we go through all of this right now. And more importantly, we look at some of the live charts and actually break down these key levels. So if you've been watching for a little while, we've talked about so many different setups. We've been discussing the idea of course, metals rebounding. Last week, we saw China stimulus come back through, which has had dramatic implications to many different markets around the world, specifically if you're a commodities trader. And it's a pretty exciting time for that. But now we find ourselves also at a very interesting point for the US 500. Dock strikes and, of course, geopolitical tensions bringing some volatility back into the markets. But I think all of this was probably already starting to show up when it comes to technical analysis. Of course, now there are reasons to create a catalyst, but as we always say on the show, generally there is something happening before all of that that happens in the price action. So what I thought we'd do here is we'd break down the US 500 first. Then what we'll do is we'll go through and we'll look at some of the other pairs. So obviously we'll go through some currencies. The dollar in particular is getting some massive shifts. And then we'll go through also oil, because oil is getting a bit of a heat up. What are you guys trading though? Let us know in the chat right now, and we'll cover some of those today. So if you have something that you have been specifically looking at thinking, wow, this is a great looking chart, let us know, and I'll do some analysis on it today so that you guys can actually see how we'd break something down. Well, let's start off here with the US 500. We're going to go to a weekly chart. And I know a lot of people always ask the question, why would you start at a weekly chart when you're probably going to be day trading or scalping? Well, one of the reasons we do this is because when you can see this chart here, you'll notice that we have a weekly 20 moving average that's been quite respected. So we have, of course, 20 moving average bounced off, 20 moving average bounced off, 20 moving average bounced off. So that's an interesting point in itself, because it means that if the markets do come back down to this level in the future, they may bounce off. So it's always very important that we look for those key points in the markets and we pay attention to them. Now, if we scroll down to the daily after that, we can kind of start to see an engulfing candle here on the right-hand side, which happened just before today's sell-off. And you'll notice that it comes through on what I call the day trade bear zone. Now, why do I call it the day trade bear zone? Well, this is one of the tools that we've used here on the channel and we've used in these live education sessions for a while. It's, of course, our favorite, the fixed range volume profile. And what you'll notice is that when we apply the fixed range volume profile from here to here, this becomes the most important zone because it's what we call the point of control, the POC. And the POC is really an area where effectively the most amount of trades have gone through over whatever that selected volume range is. So remember, the volume profiles show you the value area high, the value area low, and the point of control. Point of control is the most traded. The value area high holds the 70% value volume low level, and the value area low holds where the 70% volume level is. So all of these are very important to have on our charts, but realistically, we always like to pay attention to the point of control a lot. So in the recent times, I think one of the most important things of the last kind of two sessions was that we were putting pressure on this 57 kind of 11 area. And that's why at the moment, you can kind of see here that the market's starting to pull back a little bit. And of course, where is the most logical zone for it to go to? Somewhere around this 5630 to 5600 level. Now, can anyone in the discussion rooms kind of figure out why we might want to be targeting this level? I'm sure most of you will be able to figure it out pretty quickly, but there are some reasons. There we go. We've got Tyrone joining us. Can you hear us, Ty? I think he's just turning his mic on. Thomas Brady says, hey guys, I'm trading Bitcoin US dollar earlier, looking for a bounce, which I got. Momentum is moving back down now though. Yeah, and we'll look at that one very soon. Don't worry. Currencies, in this case, crypto, we'll be looking at crypto very, very closely in a moment. So, of course, the most traded zone, very key level. And we know that this could be where the markets are starting to angle in at least in terms of the initial move. Now, once we kind of analyze that on the daily and we analyze that on some of the other timeframes, that's when we want to start thinking about candle analysis. We want to start thinking about what has been happening on the smaller timeframes as well. And you may notice that we've kind of been meandering up here with the series of higher highs and higher lows and higher highs and higher lows. And then something changed kind of during the Monday session. we started to go underneath some of these most previous lows and we forced a lower low, but then that was rebounded very aggressively up. And it came back to this kind of key, almost all-time high zone. Now, this is a level where I think, a lot of things started to change, specifically when we saw the setup of the previous session and we had this little structural zone here. For day traders, this would be a very important area because you would have been looking at this as a potential high resistance, and you would have been paying attention to this one from the perspective of, have we started to see a topping market? So that is a market that's basically finding, it's slowing down, it's finding a bit more resistance. And was there something in this that we should have been paying attention to? Well, here we've got a high, here we've got a low, here we've got a higher high, and then of course we've got a lower low over here. Just to make sure you guys can all hear me, with this recording, and it is working, just because we are having a couple of little technical issues there. So I'm sure you can hear me. Otherwise, you would have said something already. And yep, we've got a few people coming through saying yes. So this actually was a switch of trend in the previous session, and it happened into the open. Now, the reason you know it happened into the open is because look at where the volume spikes are. Now, whenever you're doing candle analysis or you're doing any type of technical analysis, day trading and scalping, really it's most important to generally day trade and scalp around opens in particular and closes. And the reason we want to be doing that is because that's where the volume starts to heat up, and usually you get a lot of traps. You get a lot of what we call liquidity trapping. Now, this area up here was a high, a low, a high, a slightly lower low, and then it kind of just like bounced back up, and then it went through. Now, once it went through here, of course, we know that this was news related, but it became quite important because what that news was telling us was that already we were starting to see the signs of potential weakness. We knew that the market was starting to slow down. We knew that this was a key level down here. And then as it closed during that daily close session, and this is where the beauty of it all comes in, because of course it's candle analysis, we saw that the daily candle closed underneath that little area that we call day trade bear zone. Now, once that happens, you can then start to get a bit of a bias. You might have been biased towards the long side, but now maybe you can start to bias towards the short side on the smaller timeframes. And that opens up so many different trade opportunities, including looking for signs of weakness through the session. So here, of course, we start to create our own new path of volatility throughout this trade range. So we can grab our fixed range volume profile and pull it through this area. And you'll start to see that there are certain areas that are getting more heavily traded. For example, this 5,700. Now, why could it be 5,700? Because it's a round number. So if we already had a bias towards the short on the session and we went kind of through, down, comes into, of course, this period being London Open, we rally back to 5,700, which we already know is the most traded area, then we could be looking for potential shorts around here. And so far, that's what's been happening in today's session. It's basically been shorting off that zone and finding weakness, and it's just about to make a new low. Now, interestingly, we might come back to this later on today's session if it does happen. If you do end up making new lows, and you can ever watch a very important new low area, what you'll see around here is a fluttering of price. You're going to see price go up, down, up, down, up, down, all around. And sometimes it will just break it and just get super aggressive towards the downside as orders are triggered around these key levels. Of course, this is one of the most important areas for today's session because we've been trapped in price, and this could signal further selling pressure. So by using just a simple technique of fixed range volume profiles and, of course, understanding that markets are starting to weaken a little bit in terms of price action, we may have actually already had an opening. Now, I know there's a lot more on this US 500 chart that I've used to actually analyze it and correctly kind of figure this out, including some large liquidity trades. But the essence is trading volume and trading size is always going to be able to be seen as well through the volume profiles and sometimes through very heavy rejection style candles. Now, Ty, we got you. Can you hear me now? Oh, no, he's muted. That's all right. He can probably hear me, but I think he's muted. Yeah, so basically we have...
Hopefully you can hear me now.
There we go. Okay,
yes.
Yeah, back, yeah. All right, so what basically we've been talking about is the rejection on the S&P this week, which is, so-called called based on news, but realistically the markets were already starting to show signs of exhaustion. So, of course, this is now a catalyst, an unfortunate catalyst, but it's a catalyst none the same. And we were just discussing the idea that if we'd seen at the top of that market the shooting star or even one of your favorites, what would another candlestick pattern be that would be very strong if we did see it set up on something like a daily at a topping pattern?
Oh, we could have an evening star. We could have a bearish engulfing. There's quite a few actually, but the evening star is one of my favorites, as you know, Tom, and
Yeah.
that's very, very
Mhm.
powerful. Yeah, absolutely.
Yeah, so the evening star is a pattern that if you're not familiar with it, we highly suggest you go and look at it up. Morning stars and evening stars. There are three candle setup pattern, specifically very good on dailies, 4 hours and 2 hours. And they can give you a lot of heavy, I guess you would say bias, but good bias in
Yeah,
directions of markets. They're great at turning points. The most powerful ones are actually at points where you've already got an upward trend. So let's say you had like a kind of daily upward trend and then it comes down and then you see a pattern like this forming on a 1 hour chart or something, and it's in the direction of trend, very powerful overall candle setup. So these three candle
absolutely.
setups can be quite good. Regardless of any of this, though, that Ty, I think the thing is with the S&P 500 is it looks like there could be a little bit more October volatility here. It looks like 5600 to 5630 is going to be a very interesting point based on our volume profile analysis. And this is the type of stuff that you want to start bringing onto your charts if you haven't already been doing so. So,
Yeah,
you can also
absolutely.
see the rejection wicks here coming through as it's starting to find bounces. So if it finds another bounce, let's say later on the session, does something like this, that's going to be a very negative sign, I believe, for markets, and it's going to start pushing towards the more than likely kind of areas.
Yeah, given the volatility that we're seeing overseas, Tom, I'm actually surprised the market's held up as strong as it has, to be honest. I thought we might have seen a bit more of a reaction with escalating tensions in the Middle East, and I know oil's obviously been up and down and all around, but the indices, the world indices, have proven to be very, very resilient so far. But it'll be interesting to see how long they can actually hold up before it actually does start to affect it, because yeah, indices in the day when we first started trading, any news would move the market, didn't it? Like basically 15, 16 years ago, if there was any escalated tension in any country, you'd see the US markets all over the place. These days, they've become very, very resilient, and it does take a little while to actually kick in. So it'd be interesting to see how long it can actually hold up before it actually starts to feel the effects.
Yes, so if we get that kind of just instant, instant, boom, boom, it goes through a zone, it's going to probably be quite a liquid for a little period there. And I think the area that a lot of people will be looking for is it may gravitate down here, but if it loses this area, it could get quite volatile very quickly. And I think that's also
Yes.
what Tyron's saying, because October is historically a weak month in US elections. So yeah, it's getting interesting, which is good. Now, you mentioned before oil. Now, oil is actually my kind of trade of the week. So let's go over to oil and do some analysis on this one. Now, this is not like, I mean, you could easily say, oh, well, tensions in the Middle East, that means oil is going to go up. That's not always the way. Sometimes, actually, on this show, we've gone against that if the price action is dictated that we should be going against that. In this case, though, Ty, things are looking quite bullish for oil. We're coming off a significant low level. We saw a massive switch of trend in terms of things started to get very, very bullish. And this is why we want to do candlestick analysis here today, because again, you should be starting on the higher time frames, but take a look at this candle. Now, it may not look like much to a lot of people, but I think that this low steal down here where the market came to our watch reaction zone and that significant wick that came off it, if we imagine this through so many different time frames underneath, there was an aggressive pickup by the market, and wicks often hold this aggression. So this is a significant switch, I believe, off the bottom tire, obviously with the catalyst. And it kind of gets better than that because when you start to look at it, I mean, I think even someone that doesn't really look at anything to do with technical analysis might be able to see this. Can anyone guess what we've got on the chart here that's in plain sight that is a pretty strong factor here when it comes to markets? Can you have a look? While we wait for a few people to come up with that one, I also want to just go to smaller time frame analysis, Ty, and that is that we have a downward market action that suddenly switched to the upside, especially getting through this supply over here. And you can see here I've written day trade buyers question mark, and the reason why is because this switch off the bottom is so strong, so much volume in it that it makes me think that someone injected a lot of orders into this market. And at the moment, breaking the downward trend line, which is the correct answer. So thanks very much for that. Is a very, very key point. So if we look at this in everything considered, that's a very strong close should we get it. Your thoughts on on oil, considering it's doing this. It's breaking through
Yeah,
at this
look,
point.
I think you could write a whole technical analysis masterclass on oil in 2024. It's been so technical. And yes, we have volatility now, and obviously it is interacting quite viciously, I guess, with the candles. But you're right. I mean, it looks like it wants to go. And what I like about this opportunity, Tom, is not so much that it is breaking the trend line. I mean, that's great and all, that it's giving us the entry signal. But I think the potential upside from here, is probably somewhere in the vicinity of 77.50 to 79. So there is a significant move up that can happen. I just want to see a little bit more. I mean, obviously, I'm a little bit greedy, and I love just a little bit more. I want to see a close just above that 72.50 level, and if we get that, I think I'm going to be very satisfied. And I think even you popping that volume profile on right now, if you extrapolate that out to the level marks, you can see that the most traded zone is going to be around that sort of 78.50-ish area, which really is a very solid target for it, because there's not a lot in between the 72.50 and 77.50 really in terms of obstacles. So I think it's a pretty reasonable chance of putting on $5 if we get that close. It's looking really strong.
It really is, and I think a lot of people are sleeping on it now. Of course, the catalyst is what most people always deem it to be, which is, of course, tensions cause oil to go up. But we have seen that obviously debunked many times before. We saw it even when these first escalations happened. Oil actually had run already about it's like $15 a barrel, and then it sold off big time. So maybe it was $10 a barrel, but it was a lot. So again, this is a very significant level, and we're seeing quite a lot of this. I mean, not only did we get the China stimulus, and Thomas says here, I was assuming the big move in China is keeping things together for now. So that's, of course, the stimulus package, which is significant. And by the way, a significant change in policy, which is what you look for a really big move. China is absolutely getting short squeezed through. I'll just show everyone, if you're not familiar with what's going on with China, I'm sure you all are, but this is an absolute significant short squeeze. I'd like to think, considering we've actually covered it here in the education sessions quite a few times, we've been discussing this HSI for quite a while. So I feel like it's almost a partial vindication time. You actually notice here that it's hitting 22,600, which is such a significant resistance. I'd be surprised if the market is able to, really keep going from here. I mean, that is not for the faint-hearted in terms of percentages. I'll actually just mark this so everyone can see how crazy this move really is. 33.4% on a major index in a week and a half. Someone's losing big.
It's almost unprecedented.
Yeah. And you wouldn't want to short this.
No.
Yeah.
I think that's the danger. Like, I know a lot of people might think that's an automatic short. It's not an automatic short. No. You've got to be very, very careful when the game is being played like that. And
the reason I want to keep going.
No, I think, kudos to the people who, read that trend line that you got right there broken, come back down and retested it if you don't mind, and then off it went. Yeah, it was
two
very
excellent
good.
trend lines. This is actually so significant in squeeze. I believe it's actually taking out hedge funds. This is where significant wild action comes through. So yeah, big deal, and it's an absolute mammoth of a move. One of the biggest I've seen really in the last couple of years, considering how many probably trillions this is really adding in on markets. So it's it's something you should pay attention to, because you've got to expect the unexpected. A lot of people would have thought this would have been where shorts have come in. I think they've been squeezed out of that position. So we've got US oil with a really nice setup through that daily level. Tyrone mentioned, of course, wanting to see a close on the high would be significant to get that more bullish bias for scalping and for day trading. Let's now move over to some other markets. Now, the US dollar tide, do you want to walk us through this one? What have you been seeing on the US dollar? Because I know it's got one of your favorite setups on it.
It has got one of my favorite setups, Tom. And look, it's promising. It really is promising a lot. And the problem with the dollar index, though, it promises a lot and delivers, not much a lot of the time, but there is a significant breakdown in that trend line. I mean, you're pointing out some arrows there. We're seeing a potential break up above these levels. It's trading above the 20 moving average for mine, which is a very, very important zone. We've got, we do have MACD, divergence, a bullish divergence coming off this low. We've got consolidation at extraordinarily important visuals, which is around that 150 level. it's doing a very, very good job of round bottoming here and closing up on the smaller time frame. So I do like it. I think it's got potential to, yeah, look, it's very, very important where the support is, right? There's no question about that. It's trying very, very hard to push up higher. And I think that if we can just get past that sort of 101.20 area, I think it really opens itself up to that move exactly where you've got euro line. Basically, the 101.80 area for me is the next real target for this. Obviously, the euro would be looking at short at that point, but I think that it's doing all the right things right now to really indicate that I think the momentum may well be with it. And I think that you've got to remember this is actually very independent of what the US indices are doing as well, right? So it has decoupled itself from, there was a while there. It was moving in sync, exactly what the indices were doing. This is its own beast now, and it is basically operating as a decoupled instrument, which is good because that's what we want. We don't want to have to be relying on a million different components to make something move. The dollar index is absolutely its own beast at the moment, and I think the momentum is there enough. I like it. If it was me thinking, if you had a trigger loaded gun ready to shoot, Tom, I would say it's a pretty good chance of going long if you made me say it.
I didn't make you say it, but okay. we will go with the consolidation, actually, is a very important point here as well. Ty, one of the things we've talked about in the show before is that and this comes down to the candles, is that we have this resistance, but notice the market just before trying to really pressure it is going effectively coiling. Now, this is a little channel. And at the moment, if you actually look at the smaller timeframes, you'll notice it's put a little bit of pressure on forcing a lower low and then coming up. Now, if it does that again, let's say it does this. If that happens, as that breaks out, that's where Ty's getting that 101.20 from. Clear the high, do it so in style, maybe have a little bit of, sneaky one-way, double-way kind of action. Maybe this goes into the non-farm payrolls, which for anyone that doesn't know, that's the jobs numbers this week. And again, that could be where you see that sneaky wick candle that comes through, showing the excitement in markets. So this could be now where we push to 101.70 kind of area. And I like the coiling, and it's happening at the right zone, exactly just before the peak. So I wouldn't be necessarily selling the US dollar at this point. I think it's more strong than weak. And Ty would definitely go with that based on the daily 20. Yeah. And that's why we look top down.
Absolutely. We talk about the like a band effect all the time, and your consolidation is effectively like a band being stretched. And when that does let go, quite often the bounce is quite aggressive. And I think, I don't think we're asking a lot of the market either, by the way, to get to 101.70 to 101.80. I mean, that could do that, overnight. So I don't think we're asking the world here. I think we're just asking for a little bit. It's just a little bit of movement, and I think I'll be pretty happy with it. The consolidation, I agree, is giving us a signal really that a break above that level, I think it could be happy days for a little while.
Why don't we move on to the euro as well?
Yeah. Can we have a look at the euro just for a second? Yeah.
Yeah, for sure. Yeah, gap there as well. I just wanted to mention before we move over. Okay, let's bring up the euro. Have a look at this.
Yep. The reason I like to do the euro straight after the dollar index is because it gives us a really good indication of how the two are working in sync. And realistically, to me, I see a very, very potential, like probably everybody who knows technical analysis, a really high probability of a double top pattern happening here. That's very obvious. It's still got a little bit to go, but I think that if we can reach that neckline on the euro, we would almost certainly be beating the 100 or the 101.20 on the dollar index. And like we said, if that breaks, we think there's a really good chance that it's going to go up another 50 or 60 points, which is a very, very strong possibility that this double top will play right down. If you measure it out, it's going to go and, proof itself with the 109 level. We love all that. You know how much we love technical analysis proofing itself with these levels. And this is a very, very strong possibility of it happening. So it's very important to look at the euro and the dollar index, next to each other, look at them in line and see what one is doing, because sometimes they do give you a bit of a clue that you can actually get in on the action prior to the actual movement happening. Understanding that the two are intrinsically linked together just through force of basically how much of the euro makes up the dollar index, the dollar index makes up the euro, you can sometimes get a clue as to where the movement's going to be, because sometimes they are delayed in their processes. So by that, I mean the dollar index might move before the euro does. And if you're onto it, you might get yourself a bit of an advantage of actually getting in on a move prior to it actually moving. And it does have to move. There's no question. If the dollar index goes up a lot, the euro must come down. It's not a thing about it has to. So just be aware of that, and knowing that sometimes give you a clue of getting in on one of these a little bit early.
Another thing you can do there, Ty, is also you mentioned the combo there, UK oil versus oil as well. So that's Brent versus crude WTI light. That those two, sometimes Brent will go early, and if Brent's going and then you see the other crude go, then it can again be one of those catalysts that's a good combo.
Yeah.
All right.
But
Well,
understanding the combo is very important, though. I'm just going to say,
yeah.
because I know I have had a couple of people get a little bit confused over the last few weeks, actually thinking that silver and gold are linked the same way. They're not. And even though they do often move in sync, don't be taking it for granted that they absolutely must go in the same direction, because they don't actually have to go in the same direction. It's just occasionally they are linked together. But a lot of the time they do move, and it's obvious sometimes. I mean, gold is breaking to all-time highs, silver's nowhere near it. So you must know which pairs that you are using as a proxy for the other. Don't be just convinced because they're metals that they're going to move at the same pace. So just be careful with your pairings, because they're not always as equal as you think.
This is US dollar yen here, Ty. This is one that you had up last week. Do you think it's on the kind of rampage path towards the upside, considering it did get the close above this candle? Obviously some vol, but what are your thoughts?
Yeah, the volatility is there, but you find me something that hasn't got volatility over the last few days. I think
Right.
I think the volatility is actually going to help it, and the fact that it didn't sell off is probably giving me more of an indication that the momentum is strong from here. It's trying to rally from this point, and I think a break above that level, and it opens itself up to some pretty good moves. I think it's really
Yeah,
trying. Yep.
I'd even say it's already got a pretty good base formation. Like, let's just put a
Yep.
fixed range volume through this, because when we look at it, obviously the most traded zone was where we saw the bounce. We've got decent thought process behind the markets actually finding a bounce off here. I would say that's actually a replicable buy on the scalp at that point. And as Ty's saying, like, around that 145 probably, area, you start to breach that again, it's more than likely looking towards the long end. And that's another way of, taking that kind of US dollar strength and applying it to a chart, which is obviously already, fairly heavily hammered based on the Bank of Japan stuff. So we had mention of gold and silver. They are different assets. I do remember gold is kind of like a currency. It's like the oldest hedge in many ways, whereas silver is a currency that also has mostly properties as a useful metal. That is, it's used in all sorts of building infrastructure, etc. Now, gold, I really feel like gold is overshooting its current run. So, of course, we are bullish on gold, and so has Ty, but I particularly have been very bullish on gold this year, of course, going ballistic in my mind. But in this generalization here, when we look at gold, I kind of feel like, Ty, I've got a lot of green lines here. These are all basically just different VWAPs. And what I'm playing with is the idea that maybe we go down to 2560. And 2560 is where we last saw structural build. So I kind of prefer the idea that gold does have a bit of a nice, I like ebbs and flows. So although longer term I believe in it, this is actually just rebounded I think it was already going down. It rebounded a little bit because of the news. So it's a hard one to trade short. I probably wouldn't do that myself. However, I would be looking at what happens at this reaction down here in 2560. Could be a nice wick zone from a candle formation.
Yeah, I agree. And I think that a lot of people get scared of a market pulling back, but really for a healthy trend to continue, you really want pullbacks. A healthy market does take the 2 steps forward, 1 step back approach. And that to me is a healthier market to trade. So really, it pulling back to, you might think it's counter negative to be pulling back to 2560 in order to go long. But what that actually does, it actually structures the market in a way where it's actually going up in a healthy fashion. And that does two things. It gives traders the confidence that the technicals are behaving themselves and levels are being respected, which means that although there is volatility and momentum in the market, it's behaving itself in a manner that allows you to trade it. Because what we don't want to see is a market that goes straight up in a line. Like Tom wants the gold to $3,000. I don't think he's made any secret of that. But Tom doesn't want to see $3,000 next week in one big green candle, because that's untradeable, and that makes it a very difficult trade to not only join in the trend that's going long, but also to bring it back to a level where Because what happens, the faster it goes up, the faster it comes down. So it makes a very, very volatile trading environment. It makes trading very, very risky. What happens when you get ebbs and flows of 2 steps forward, 1 step back? The easy question is, how do you trade it? Well, it's easy to trade then because you're trading at levels where you can identify. But more importantly, Tom, you can actually put a stop loss at a level that is going to give you good risk reward. If a market goes up too quickly and doesn't pull back, your stop loss, your proper correct area for your stop loss is going to be too far back. So the risk reward on that
Yeah.
trade is going to be far greater than what you should be actually doing. So ebbs and flows are fantastic in the market, and I'm barracking for the same thing. I want that pullback to happen too, because I think that gives everybody an opportunity to join probably one of the stronger momentum moves of the year.
Yeah, I think it's up there, and now Chinese market's probably number one in terms of main returns, but
But
really it's up there at the
the
top.
perfect point though. Exactly, that's the perfect
Yeah.
point though. How do you trade? How do you trade that market? You can't.
Well, you can't
Because
now.
I mean,
Yeah, you'd have to just
it's a
FOMO all over the
33%
place.
candle. Exactly. So yeah, no one wants that, because we look at that and it's impossible to trade. You can't take advantage of the long, but you can't take advantage of the short either with any decent type of risk management. Whereas gold has forced its way up there really, but it's done it in a way that's been very, very tradable, very, very replicable, and very
Correct.
quite comfortable to trade with a very good risk management strategy. So no, go gold. I say I love it. It's been great this year.
It's doing really good. And this is just getting to Ty's point. All I've done here is just got a long position example and shown you that if you bought here, let's say your target was, I don't know, 2,800, you'd have to probably think about putting stop loss below the 25.50 zone. And therefore, your risk reward would be 1.3 to 1. Now, that's not the worst, but you're asking a bit of it in an already extended path. So this is not good risk reward. It's not good a ratio. Whereas if you look at something that we've focused on many times, different types of setups, or even just where we are with the dollar, even if you place the stop below the current ranging and then you placed it where we were looking at that gap fill, that's going to give you a better risk reward. So again, trading is
Absolutely.
replications, like any business. You want to be able to replicate. You want to have a consistent base.
Yeah. Just on that, Tom, can you just walk
Hmm.
everybody through how you brought that up? Because I think that's an extraordinarily important tool that's probably not utilized
Yeah.
properly in trading view. Can you just show everybody how that risk reward ratio? Because I think it's a
Yeah.
really, really good eye opener to show you what your
Mhm.
potential trade's going to be like in a very quick visual.
Yeah. So what we do is we just go over here to the projection area. We click on long or short position. And when we then put it on the price of wherever we might want to do it. So let's say we want to buy silver at $30.65. That's a daily 20 moving average and a little bit of support. Then we can do that. Now, if we then said we want to place the stop loss behind the last low, we can bring that up. And then we can set our target. Let's say our target was, I don't know, this zone up here. And then that will give us a bit of an idea of a risk reward. Now, of course, inside of any of the trading platforms you have with Pepperstone, whether it's MetaTrader 4, 5, or even this, remember with MetaTrader 4, I believe you want the Pepperstone Advanced tools so that you can get the better, buy sell kind of tools. Here it kind of shows you what really would happen, and then you get a bit of an idea. Does this really make sense? Or maybe this makes a lot more sense if you have a replicable approach. 4-1 could be realistic. 4-1's not bad. If you do that, even a 50% win rate, you're going to be doing pretty good. So I like doing that, and that's just the projections area. So that's the good thing about TradingView. Always a lot of cool tools, even some I've never even used. Like there's stuff in here. I've used most of these, but there are some still in here that I'm sure I didn't. I don't know if I do use date range that often. Anyway,
They're a
silver
blessing. I
tie.
think the tools are just so powerful. When there's no trades to be had, explore that left hand menu bar.
Correct.
I think you'll find some things there that will make your trading so much easier. We never had these 15 years ago, and now we embrace them like they're the second coming. So never be afraid to put those on your chart, because it gives you a very good perspective of what you're actually looking at, and more importantly, what you could potentially save yourself if you're entering a bad trade. Because sometimes the proof is there, the tools are there to use them, Tom. If you don't use them and you make a mistake, you've only got yourself to blame, I feel.
You've got to put in the smart work as well. Like, don't just sit there watching the paint dry as an open. Go and do the extra work. And everyone goes on about efficiency and watching podcasts in 2-speed. Someone's watching this in 2-speed right now. But I know there is. If you're there, put the comments down below. But realistically, because people tell me that all the time, they say, I listen to you in 2-speed. I don't know how you can comprehend it. But yeah, you should be doing. Everyone's about efficiency. Why not get efficient when you're looking at the paint dry sometimes in the opens? All right, let's just take a look at silver here. We obviously see the resistance forming. We see a rejection wick here, which signals that probably price will come down. So that's another one of those style candles. Now, a lot of people misinterpret candlestick pattern of a shooting star tie because they assume that it has to be a red bottom. That is, that it has to actually close to a new low. Now, of course, you were one that was instrumental in really saying no. It should be more about just the larger wick being a higher size per capacity to the candle that really shows you the stuff. It doesn't have to be exactly textbook, does it?
No, absolutely not. And I think that really highlights understanding candle structure. If we were going to give advice, the most important advice that we would give you straight up, whether you're a beginning trader or even an intermediate trader, is actually understanding candle structure. If you understand candle structure, colors mean absolutely nothing. Because all that candle is telling us there is that regardless of whether it's green or whether it's red, I mean, whether it opened or closed a couple of points above or below is really irrelevant. The highlight of that candle is the fact that nearly 80% of its range for the day has been actually reduced underneath the open and the close. That's the only thing that really matters on that trade, not the color of the bottom of that candle. So and at a place of resistance as well. So that's the other thing you got to remember. Shooting stars don't really mean anything if they're in the middle of nowhere, but when they're at a point where there's very heavy resistance that that it's a visual and heavy resistance, they're worth their weight in gold. So understanding what the candle is trying to tell you, irrelevant of the color, I think is extraordinarily important because it gives you exactly what this did for us, Tom. It gave us the short,
Yeah.
and I think it was a very easy trade actually.
Yeah, I think this one is relatively easy because you've got your clear level. You've got, of course, what looks like a shooting star above. You take that short, you get a second entry, and at the moment, still pressure is actually forming potentially to the downside. So even through all of this geopolitical stuff where silver's up, down, all around, it's still actually trading at the moment with a series of lower highs. So of course, unless it breaks through this area, you're really kind of still on the sell signal for now. And you saw before that we've got 3060 as a possibility to where it could go. Yeah, so silver kind of also looking low in that case. Now, we had a question about Bitcoin before, so I thought I'd answer that one. Now, this was a great classic of why you've got to be a little bit more patient with your trades. Now, I'm actually a bit bullish on Bitcoin in terms of the higher time frames. They call it October tie. Because of course October is well known to be the most bullish period for the crypto fans. Historically, a very good one. Also, coming off the back of a strong September is pretty likely. September is usually horrible for Bitcoin. So yeah, anyway, they call it October. Now it's been a bad start to October if you're looking for October because it went down straight away. But we can see here we're hitting the anchored VWAP, which is always a great one. We did a video on that last week, so go check that out on the channel. And you'll notice here that we have some significant levels. Now, I haven't changed anything because I wanted to go through my analysis of this pair before, of course, it collapsed down. And the analysis was that this was a very interesting area. And I said likely hold zone. And of course, you might say, well, Tom, it didn't hold there. Are you a noob? And I would say, well, not really, because it did hold there for a while. And then, of course, it fell through due to news. Now, regardless of whether it fell through or not, we saw the market hold that area. And I could also look at that before it happened and say, I think it would hold it. Now, when you hold an area, that doesn't mean just go buy the dip. Let's go buy the dip. Yeah, let's go. It means now we look for our scalping day trading system on the smaller timeframes. And what you'll notice is as we zoom in, the market was unable to change direction. It kept coming down and making a series of lower lows, and it was unable to make the magical higher high. Now, if it had done that, see how I say first sign of strength? Again, I didn't change anything here. This is exactly how I had it lined up. Look at this. Now, you might think, oh, you got so lucky. Actually, what this is it's the difference between activation of a momentum trade from an algorithm and doing nothing and actually just basically moving towards the short. And I think what it shows you is that in trading, if you're going to treat it like a business, you can't have FOMO because if you FOMO'd, you would have bought this wrongly. And that's a big understanding. You have to wait for the right system to apply. And in this case, there was no higher high, was there, Ty?
No. That 20 moving average is telling you everything you needed to know.
Well, the reason I have that there as well is because the 20 moving average on the 2 hour was also semi-respected on the way up in this case. So there was a little bit of an inkling that maybe the 2 hour 20 might be a decent sign. That plus the higher high that wasn't there. Now, the next question is people are saying, well, I bought the dip and it's kind of still kind of dipping and I'm not sure if it's actually the dip. Well, I would say that yes, it hit an anchor VWAP. It didn't come down to what I think it might do though, which is to me, this seems the most likely path. I've already done the analysis, but basically, this is the highest trade area for Bitcoin over the last kind of 2-3 months. We're seeing 59.6 for whatever reason, get a lot of trade volume. Obviously, I'd want to check a few sources of the Bitcoin data, but it does point towards potentially Bitcoin having another shakeout. If it then gets through 62,000, that would be significant, wouldn't it, Ty? Because that's effectively lightning bolting off the bottom. It would be breaching through the 2 hour 20, which it's already found respect on once. So that would show signs of life. It's about buying what I call the V instead of buying the dip. That's just, again, the way we approach markets. And of course, if it came with a nice big different star pattern, let's say we had like a morning star or something, that could be pretty nice.
All the better. Yeah. And buying the V is buying proof in my mind. It's almost like buying insurance. You're waiting for momentum. You're waiting for somebody else to take all the risk by trying to actually long it up to that point in the first place. And you're really riding the coattails of the risk takers. And that to me is good trading, Tom.
That is good trading. We want to go with the momentum whenever we can and not take stupid risk, because stupid risk can get us in trouble. Some other interesting charts of the week that I thought you guys might be interested in: the way that markets are reacting around 260, specifically Tesla into the 10-10 event. You can see here the highs, the resistances across the board. The other one that's, I think, very, very interesting when it comes to the charts has to do with, of course, how will NVIDIA end up battling through the next week. In particular, I thought an interesting point here was the downward trend line, which is going through these series of highs. Because if that ever gets taken, plus you take 129, I think that could get us out of this consolidation phase in NVIDIA. And of course, day traders may look to that as, oh, okay, well, I'm interested in the momentum. So there's some good stuff. And then we have a question here for the odd US dollar as well to have a look at that. So let's check out the odd USD. Been very strong, moved through, actually closed weekly last week above this little resistance area, which is where we kind of thought the market would go to. I've left this as the analysis from last week. So again, we had this is the thought process, as in the legs would kind of remain the same. Great level. Obviously, you can see, bang, starts to do some sell-off. It's now above that area. It may go into a consolidation here, but are you thinking that the Aussie could even strengthen further, Ty, or because the US dollar is just looking pretty good, this is going to be a point of consolidation?
Yeah, I think this is stronger than most against the US dollar, but I think that the dollar index will probably pull it up if it starts to move. I think it'll be enough to maybe not sell it off, but maybe hold it here, hold it at bay, probably underneath this level. I like the 70-cent mark for the Aussie dollar. I think it's any form of US dollar weakness is going to probably see this at 70 cents pretty quickly. I think it'll break through this point. A lot of it's going to be dollar dependent, I think. I don't think this is, I wouldn't be expecting a big move on the way down though in saying that, not like the euro, obviously. I think that although it is linked obviously to the US dollar, it's not as I don't think the moves are going to be as exaggerated. If the dollar index goes to say 102, I don't think we're going to see a 65 cent or anything crazy like that. I think it just might hold under this level. It's having trouble getting past it. Look, there's I think it's 4 days now where it's basically hung around this level, touched it.
This is different. Yep, this is all right. I was just reading out this point. It's a different one. I've split the chart on you. Now this was the Australian US rates for the next year. So what this is basically that rates were are basically firm, and that means that Australia just can't cut like the US can. So that's why it's strong.
Yeah, no, we can't. We can't yet.
But we
might get one this year. We might get one at Melbourne Cup weekend, Tom. That's the one we love in November.
Yep.
I believe we will. I think we'll get 0.25% in November, and that'll be it.
Oh, you think we're going to get it?
Yeah, we will. Yeah, of course we will. Yeah, it's Melbourne Cup. Everyone loves the races, and
I did know that's the one that brings them. It always bought it for us.
the reserve bank, because it's the last opportunity to cut for the year. Because they don't do it in December, so November is the last meeting that they'll have, and I think that they will feel peer group pressure from around the world, I believe. So I think there's a reasonable chance that we might see a cut. I don't think it's going to be as significant as the US cut, though. I'd be very, very surprised if it was 0.5%.
Oh yeah, no, that would be crazy. I'm surprised that. Well, we'll see. We'll see. If you're right there, then you're the top economist. But the point of what we're always saying here, guys. Well, it's true. I think I don't know. I don't know if that's actually in the charts, but what we have seen is that it doesn't really matter to your trading. Yeah, because remember, only a few weeks ago, I was crapping on myself about how 50 basis points was probably unlikely from the Fed. Then they come out and do it. Now, would that have changed any about? In fact, it only benefited the trades we had on, and that's why your opinion, obviously, in some of these things, won't actually affect your trades. Instead, you need, when you're following the flow, often we'll leave you with this. Often, the news, the events, and all the trades will come through and actually benefit. In fact, I think statistically, it's up there with like 65 to 75% of the time. You benefit if you're in the right direction of the flow.
Yeah, it'll help you.
Yeah. All right, everybody. Well, thank you so much for joining us this week. As always, if you're watching this in replay, make sure to click in the links in the description down below and sign up so you get access to this straight away. And we're looking forward to keep covering this into the US election because, of course, volatility might just be starting up. Watch the VIX. Make sure that you're aware if the VIX gets through 20, it's just 15.33. Whenever it gets above 20, that's when you start to really love scalping and day trading. So, yeah, that would be great. Everybody saying thank you so much. It'd be great to meet a few of you as well in the Melbourne event next week. So looking forward to that. And bye for now. See you guys.